Everyone keeps asking the same question. Is 2026 finally the year the housing market breaks? Or is this just the new normal? Depending on who you listen to, you'll hear everything from prices are about to crash to rates are going back to 3%. And honestly, most of that is clickbait. In this video, I want to give you a realistic housing market forecast for 2026, both nationally and specifically here in the Pacific Northwest. I'm a mortgage lender licensed across the West Coast, and I work with buyers and sellers every single day. So this isn't theory, this is what I'm actually seeing on the ground. My goal is simple: to help you understand what 2026 probably looks like so that you can make smart decisions instead of emotional ones. To really understand 2026, you have to understand how weird the last few years have been. From 2020 to early 2022, we had historically low mortgage rates, massive stimulus, people moving, upsizing, relocating. That created artificial demand and prices exploded. Then in 2023 and 24, rates rose faster than they had in decades. Affordability got crushed, transactions slowed. But here's the key thing that surprised people. Prices didn't fall the way that they did back in 2008. Why? Because most homeowners today have great credit, have fixed rate mortgages, have equity, and aren't forced to sell. By 2025, the market didn't crash. It reset expectations. Buyers adjusted, sellers adjusted, and that's the environment we're heading into in 2026. On a national level, 2026 looks a lot more boring, and that's actually a good thing. Here's what I expect. First off, home prices. Most economists and housing data point to modest appreciation, roughly 2 to 4% nationally. That's not explosive growth, but it's also not a collapse. Why will prices stay supported? Well, we still underbuilt homes for over a decade. Population growth also hasn't stopped, and construction costs still remain high. Next, we have inventory. Inventory improves slightly, but not enough to flood the market. A lot of homeowners are still sitting on 3 to 4% interest rates and don't need to move. So nationally, 2026 is less about drama and more about slow, steady normalization. This is the biggest wild card and the biggest misconception. Most people think mortgage rates are controlled directly by the Fed. They're not. Mortgage rates are tied closely to the bond market, especially the 10-year treasury, and influenced by inflation, global investors, and economic confidence. For 2026, here's the realistic expectation. Rates probably don't crash. Rates probably don't spike dramatically. Rates likely settle into a range. I'd expect something like the mid-5s to low 6s with normal fluctuations. And here's something important. A stable 6% rate environment is actually healthier than volatile rate swings. Buyers can plan, sellers can price, lenders can structure smarter deals. Stability matters more than chasing the lowest number. Now let's zoom into the Pacific Northwest, because the PNW plays by different rules than much of the country. Markets like Seattle, Portland, Oregon, Vancouver, Washington, Ridgefield, Camas, Battleground, Bend, Oregon, Spokane, Washington, and surrounding areas. The PNW has 3 constant pressures. 1 is limited land and zoning restrictions. 2 is the strong job markets and lifestyle demand. And then 3 is a steady flow of people moving to the region. Because of that, Pacific Northwest markets tend to hold value better during slowdowns and rebound faster. For 2026, I expect 3 to 5% appreciation in many PNW submarkets, entry-level and mid-price homes to remain competitive, new construction to help but not solve the supply issue. Even when rates are higher, people still want to live here. That demand creates a floor under prices. If you're a buyer looking at 2026, here's the mindset shift you need to make. The goal isn't timing the perfect market. The goal is buying when the math works for your life. Successful buyers in 2026 will focus on payment, not just rate. They'll use seller credit strategically, leverage temporary buydowns, have a refinance plan, not a prediction. I've seen a lot of buyers wait for years only to get priced out, not because prices exploded, but because life moved on. 2026 rewards preparation, not hesitation. For sellers, 2026 is a market that rewards realism. Buyers are cautious, they're payment sensitive, and they're informed. That means that pricing correctly matters more than ever. Presentation matters more than ever. Flexibility on concessions can be the difference in selling your property. Homes that are priced right still sell. Homes that chase yesterday's market sit, and price reductions cost more than starting right. So the 2026 housing market isn't about fear or frenzy, it's about strategy. Nationally, you can expect stability. In the PNW, continued demand. And for buyers and sellers, smarter decisions win. If you want a personalized breakdown for your situation, especially here in the Pacific Northwest, feel free to reach out. I'm always happy to walk through real numbers and answer any questions. For more content like this, make sure to like and subscribe, and I'll see you in the next video.